Tuesday, the 15th of September. I am Bosun Amofaye, and this is yet another edition of Frontier Opening Bell. Let's get the team introduced. Joshua Odebisi, who is in charge of banking analysis at Retiva Capital Management. Good morning, Josh.
Good morning, Bosun.
Thank you so much. Also, Ayode Jebo from Afrinvest. He's the CEO of Afrinvest Securities, the securities trading arm of the Financial Services Group.
Yeah, good morning.
Thank you. Agnes Jita is a partner at GBS Africa and a partner also at Frontier Africa Reports, Head of International Relations. Good morning.
Good morning.
And the man will get Frontiers together, also a rich man, Rich Frontiers Management, Ali Khan Sachu. Good morning.
Morning, boss. I'm good to be with you.
It's good to see you. Thank you, all of you, for being part of the show this Tuesday. Let's hit the ground running. We have Nigeria's inflation for the month of August just out, hitting 13.22%. Food inflation now effectively 16%, and core inflation higher 10.52% year on year. We'll all talk about that, but let's quickly run through the markets. A bit of a 0.05% positive reading for Nigerian stock market on the first trading day of the week. Ivorian market was much bigger. The BRVM printed 0.56%. The Egyptian market was headed south at 11,034. The Kenyan market softened 0.18%, and the South African GSC 0.43%. Tito Mboweni is speaking about how deep the recession will be for Africa's most advanced economy. So let's talk about Nigeria. Of course, we have quite a big story around inflation, but of course, that will come after we look at Kenya's tea auction sales, which declined in prices to about $1.98. Interesting. Angola's currency is down around 30% year to date. It looks like the pressure on Angola with the G20 debts and the oil prices and all of that is yet to go away. Tanzania will earn about $3.2 billion, create 18,000 jobs over the next 25 years, or because of the oil pipeline project in bed with Uganda. And Ethiopia has a new strategy to fight smugglers and other miscreants, is to issue new banknotes. And Congo says, well, they're trying to resolve problems with the mining firm, says they will reimburse the VAT after an audit had been conducted. Ali.
Yes, so tea prices have been disappointingly soft of late, as you mentioned. The two things happening there. One, there's been a lot of production in Kenya. So we're a little bit like OPEC is to the oil markets. If we produce a lot, we tend to suppress the price. And also we've had weakness in our buying markets. That's Iran, for example, where the Rial is hitting record lows. Pakistan has also been, pretty soft. So bit of a struggle in the tea markets. I saw this week that a lot of producers were withdrawing supply from the markets to try and bring the supply-demand equation back into equilibrium. So we'll keep an eye on that. Angola Kwanza, probably one of the worst performing currencies on the African continent this year. Debt to GDP is in triple figures. They've had this long drawn out restructuring of their debt, which has been going on. They were downgraded to a C, which is default status, a week or so ago. And it's a very difficult scenario that they're dealing with. It's difficult to see a rebound in the currency just yet, particularly because of the weak oil prices that we're seeing as well. I saw the IEA came out with a pretty bearish report, which is telling me there's further pressure coming on the oil price in the next few months. The oil pipeline, of course, which was celebrated with much fanfare yesterday, day before yesterday, and President Museveni's been tweeting about how excited he is. You're talking 3.2 billion over 10 years. It's a significant geopolitical success for Magufuli, I have to admit. And, the issue is whether they can now develop Tanga, which was an old port, back into some kind of oil and gas hub as they feed the Albertine Basin oil through that conduit. Ethiopia's demonetization, we've seen demonetization in Kenya not too long ago, in India. But I think the challenge in Ethiopia is a currency value challenge and a lack of hard FX. I think demonetization will help in some degree, but really it's about finding the correct price for the currency and about increasing exports, because Ethiopia has a large import-export deficit. And Congo saying they're going to return VAT to the miners would be a good thing. A lot of the miners in Africa have struggled to get their VAT back. Congo is just one example of what are a number of countries, Kenya included, frankly.
If I ask Agnes about the Kenya tea industry, I'm sure a whole lot of tea consumption in the West, even more than we have on the continent of Africa. I don't know what Ali is drinking, but I'm drinking tea, by the way. So I don't know.
I'm a Kenya coffee man.
Agnes.
So I'm sure Ali in London, you have to drink Kenyan tea and Kenyan coffee, obviously. So you're absolutely right. The tea market has been, the tea prices has been fluctuating, partly because of the demand from traditional markets, as Ali alludes to. But I'm hopeful that come autumn, winter, when the demand from UK and the European market will probably try and will boost the prices. But also another significant is the competition from Rwanda's tea, which has been competing with Kenya. Apparently it's of better quality, but yes, there's been bumper harvest, and therefore supply and demand, we have more than the market requires. So certainly, and what this means is lower bonuses for farmers in future, which will be a challenge. But I guess nothing to worry. Coming months, October, November, December, when it's cold winters in Europe, I'm sure where Kenyan tea is valued, I'm sure this will probably change the pricing.
I've been thinking about this, perhaps like a Starbucks or something like that between Kenya, Rwanda, Uganda, Tanzania. Perhaps you folks need to have one iconic tea or coffee brand store, like outlet, like Starbucks or so. Put it up in Europe, in Asia, wherever, in the US, and rally all the brands and call it East African, whatever, Starbucks, whatever you call it. But again, that's
I guess that's a very important point. With Brexit and Kenya negotiating a trade deal with the UK, remember our tea comes through auctions. It doesn't come directly to the UK market. So suddenly maybe this is one of the things the Kenyan government should try and negotiate. Can we access the UK market directly, and the farmers can find opportunity to sell the tea directly to the consumers? That's probably, if I was sitting in the negotiation team, that's one thing I would push for. But
yes, and I know Adeji and Joshua are thinking about tea production in Taraba State, in Nigeria, in Adamawa, and the rest, and we're not even gaming on that. This is our food inflation now at 16%. Joshua, let me start with you. This is as bad as they can get.
Well, I mean, it's to be expected. We've spoken about, the sort of challenges that food is facing and will continue to face so long as this current policy direction is maintained. I'm surprised that inflation didn't even go a bit higher than what we saw. But, I think before the end of this year, the figure will continue to climb quite significantly. Because demand is only going to get higher and supply is only going to be more constrained due to a lot of factors such as, the flooding and insecurity. Like we've said, the most important thing in order to fix or to address this issue has to be the mobility of your products, right? Nigerian products, unfortunately, still have to follow a very outdated route in terms of road transportation, and that adds to the cost of food. Now, obviously, the price of petrol has gone up significantly just in the last month or so, that will affect transportation. So that alone will add to your what do you call it? That alone will add to your costs. So obviously, I expect that the figure for September will be even higher. Now you add, on top of that, the fact that the federal government is calling for the complete banning of importation of all food products. Well, not the federal government, rather the president or his representatives or whoever it may be. This will only add to the food inflation we've already seen. So I can only see it getting worse in the near term. And unfortunately, I don't know if that is the objective. I can't imagine that the government wants it to get worse for its citizens, but their policies are a direct cause of the current predicament that we're in, and to only continue to, exacerbate that as long as they maintain this current policy direction, unfortunately.
Okay, we'll take the inflation and a few others to the market with Ayode Jiebo very quickly. But let's look at the Nigerian market. We spoke to Dr. Mahmood, the central bank director in charge of monetary policy, yesterday evening on Arise Exchange, and he says some of the interventions by the central bank will take about a year or two before they materialize, so everyone should stay the course. Monetary policy will remain on course for 2020-2021. And Ghana is raising cocoa farmers' pay by 21%. About $1,745 farm gate to allow cocoa farmers get more benefit from their productions, just the way the Ivorians are doing next door. Oil slumps is a story we have right now. Oil prices down, Brent, US below 40. Hurricane Sally is doing some damage, but OPEC revision of global oil demand for 2020 to about 90.2 million barrels per day. It was the tipping point here for oil prices. So just a quick one here, about a minute, Ayode Jiebo at AfroInvest. In terms of the monetary policy statement from the central bank and inflation that we've seen, how do you think investors will react to this with your headline inflation now effectively at 13.322%?
Yes, I think the inflation rate is in line with expectation. We all know the factors that are driving the inflation rate. We know it will continue to be on the upside. Petrol prices, now that is being almost deregulated, currently selling at almost 160. So you expect that upside to continue to, there will be that major pressure. Also on FX, we are beginning to see that transmission effect. Imported food accounts for like close to about 20% of the total index. So that's for most of the importers are accessing FX via the unofficial window. That is having, so we're already seeing that impact already. So I think for investors, it's now going to be like a major drive for alternative investment that can help them minimize that negative real return. So if inflation rates continue to increase at 13.2%, and you have your T-bills at 3% for 1 year, that's almost 10% negative return. So you need to try to see how you want to diversify, looking at alternative assets to shore up your investment, such that the overall return at least would be better than just putting it just in fixed income. So for investors, it's not a major surprise. We don't expect any knee-jerk reaction in our market today. It also now buttresses the point where for long-term investors looking at the equities market, if you look at the yield, for most of the dividend yield on most of those stocks for the top banks are still above 12%, which is closer to inflation rate. So it's now for investors to take on more risk. Even for the portfolio managers, they need to also be more active now because it's for the investors or for the contributors, right? For the contributors, having your funds, putting your funds at 2% when you know it's long term, you'll be retiring in the next 10, 15 years. So they need to also change their strategy and to be also more active in trading this portfolio.
Okay, we'll have a bit more around a couple of Nigerian market story. The SEC has just approved cryptocurrencies as one of the instruments to be regulated within the Nigeria. So what does this mean for the crypto family moving forward? Quickly on South Africa, on Southern Africa, the outlook is on tomorrow's Reserve Bank decision. Some survey says the SARB will do nothing and wait until November. Would that be the best way to go? But Tito Mboweni says the economy will shrink more than 7% initial forecasts. Meantime, world top gold miners are retrenching and cutting output despite a big 30% jump in gold prices in 2020. Agnes, what's your take on South Africa's economic situation in terms of what interest rate you think should be at the currency?
Well, we talked a little bit about the decline of the South Africa's economy yesterday, and I think that's been ongoing. And what I quote Ali in saying that the one thing you can trust is South Africa's data might be factual compared to other African countries. But look, I think the administration is doing whatever they can. They inherited an economy that was completely run down after 10 years of Zuma. So it's going to get worse before it can begin to get better. But interesting on the gold miners retrenching and leaving the market, but the story after is that Harmony is acquiring Ashanti Gold. I am quite confused because apparently Harmony has posted losses for the year despite gold prices soaring during in the last sort of 1 year during the corona pandemic. So it's a market that is coupled with a lot of challenges, power outages, decline in production companies, and also obviously the effect of coronavirus. It means production is at the lowest for a lot of manufacturers. So it's just going to get worse before it can get better, but I guess it's the story everywhere.
Ali, thank you, Agnes. Ali, do you think what do you think the miners are trying to do here? Making shareholders happy?
So I think
more of the cash.
In Harmony's case, Agnes was alluding to their recent report, which booked a loss. They hedged themselves against a fall in the price, and of course, it went the opposite way. So they basically missed the rally in the underlying. Raw material. It was entirely unfortunate, and it makes one worry for them. But I think that was company specific. But what I think you're seeing from that other news story is that these gold miners are looking to become more efficient and increasingly cut costs and look to try and ride the rally for bigger profits for their shareholders, who've actually waited quite a long time for this bounce that we've had. The last surge was in 2011. It's been a number of years. And just to mention two things quickly, the Johannesburg All Shares been on a red hot streak, 7 winning sessions in a row, I think best since 2018, which is interesting. But markets can divorce themselves from the underlying macro fundamentals, and I think it was very oversold. And then Tito, again, he has this habit of pouring cold water on any optimism, but he tells it how it is. I also saw another report about SABC running out of cash, a little bit like South African Airways, which speaks to that parastatal problem that's there as well.
Okay, let's get back to the Nigerian markets just very quickly. Joshua, what's your take on SEC's move to regulate cryptocurrencies and classify it under the securities listing, kind of?
Well, so I read the listing this morning, and I read the regulation order this morning, and I was a little bit confused as to how they plan to execute it, because it was talking about securities made for the benefit of Nigerian investors, and securities made in Nigeria, securities made for Nigerians. Obviously, the whole idea, the general idea is that, cryptocurrencies are securities, a form of security, and therefore they fall under the purview of the SEC to be regulated, which is fine, makes sense. The biggest issue is that it's very difficult to regulate blockchain technology, and that is what cryptocurrencies all run on. So the SEC can attempt to regulate it the classic way, but it will be very difficult due to the simple fact that it is a decentralized process. Anybody can set up, a blockchain account and trade cryptocurrencies, and the SEC will have no real way of monitoring, regulating, or attempting to block any kind of transaction. So how they plan on doing this, the mechanics of it, I'm not sure, I understand. In the end, or ultimately, it might just be a case of them regulating all the service providers, all the different, there are a lot of wallets and things like that in Nigeria set up by Nigerian companies. Now, the SEC might ask them to all be registered and, to have reports and to, file reports with them. But again, no, the truth is that you can't really stop me from downloading a foreign app and running my bitcoins through a foreign completely offshore application. So it's a good idea. Obviously, it might help in reducing the level of fraud just by scaring off the casual user. However, the people who are using it on a daily basis and conducting transactions with regularity are very unlikely to be perturbed by this regulation, just because the practicality of it is not realistic at the moment.
Okay. Ayodeji, you have a different opinion?
I totally align with Joshua. Yes, regulations, and that is one thing we need to really work on. Nigeria always coming after. You can see for crowdfunding, it took time before we also saw the draft, which has not even been passed. So it's now they are trying to catch up. Well, sometimes it may be easier, so they need to also understand the dynamics of how it works, so that you don't issue a policy or a rule that would stifle that gains that we're seeing. Yes, there are also a lot of independent guys that are taking advantage of that in their new platforms, and which like Ponzi schemes, which I know that's one major reason why the SEC is stepping in to protect investors. But for the genuine ones, it's also, there's the advantage of also coming behind. So now they've seen how it has worked over the years, and they should just see how they want to ring-fence and come up with a framework. So they need to engage these guys, for especially the top ones, to get their inputs into these rules. Like the crowdfunding, yes, it's not been passed, but what we're saying is, if that rule is passed, it may also be a major setback for that industry with the size, maximum of 100 million, when we see a lot of them able to raise 2-3 billion in hours. So they need to engage them. They need to see how they can help them further structure, so that it will prevent those that are trying to set up Ponzi scheme in the name of cryptocurrency. They will be able to see them out of the market.
Okay, let me allow Ali to have a word into this cryptocurrency theme, because when the regulators start asking these guys to give them an idea of what they're doing, I'm not too sure they're going to tell them where the back door is or how many exit points are there.
Well, that's one way of putting it. Person, I think, we've seen a huge interest, a surge in interest across the continent. In many cases, it's about protecting the value of your savings, particularly where you're worried about the local currency. So there's been a big surge in Zimbabwe. You can pretty much correlate it. So the impulse to invest in cryptocurrencies, I think, is a normal impulse. It's to protect your savings. The problem has been that the regulators have been quite far behind the curve, and you've had a lot of charlatans operating and promising our people returns which are not possible, running off with the money. So the question is, how do we legitimize this and do it appropriately? So I absolutely agree with what you were saying. And I absolutely agree with what Luke was saying, is, it's very difficult to manage it because anybody can basically use an offshore app and it falls outside the purview of the regulator. But overall, my sense is it's a natural investor impulse to protect the value of their savings, just like gold has been for 5,000 years, and in many respects, Bitcoin, and I differentiate Bitcoin from all the other cryptocurrencies because I think Bitcoin is certainly of a different ilk, but I think Bitcoin and gold, it's a similar investor impulse we're talking about.
Well, if I can dig for crypto like I dig for gold in my backyard, wherever, I would rather prefer that because I can just keep it in my closet and make some earrings or jewelries that Agnes might just favor, isn't it, Agnes?
Certainly, Boston, but
It's the age of crypto.
But we do need regulation. We do need regulations, whether we like it or not, just to protect the consumers, particularly in the African continent where people take advantage of the loopholes in our regulatory framework. You're right. How they're going to do it, it's going to be hard, but regulators must move faster. They must be tech savvy to understand the market so we can move, because technology moves faster than our regulators. But a good move, but how is a big question. How they're going to do it? I'm sure they'll probably set standards for the rest of African markets.
I think so. With a whole lot of some of this happening in South Africa as well, even under the pandemic, thousands and thousands of South Africans investing in Ponzi schemes and all of that. Okay, let's take a final shot of the show this morning from North Africa very quickly. Egypt is issuing query over 25% tariff of exports from Kenya. We don't know where this problem is coming from, but the telecommunications acquisition of the Egyptian unit sale to Saudi Arabia's whatever is causing problem. Vodafone, it says Telecom Egypt has no hand in the Vodafone, the STC transaction. Nobody knows. But Sudan seems to have the second highest inflation on the continent, 166.83%. That's for the month of August. Ali, your final word. North Africa.
Let me just touch on Sudan and inflation rates. I mean, Sudan, you said second highest after Zimbabwe. In my experience, when you start hitting these sorts of levels of inflation, you've got a major problem and a tipping point type moment in terms of the economy. And I think the Sudanese authorities have already announced a state of emergency around the inflation rate. I was disappointed that the US is looking for $330 million from the Sudanese. It's a very difficult moment for them. And I would have thought the Americans could play a bigger role here in terms of assisting the new government in Sudan, which was birthed in this wonderful revolution that we witnessed last year of women and children looking for their freedom. And I think Africa, I think the US and other partners should all step up and try and help them. This is an awful situation in Khartoum, and you've had the floods. It's practically biblical.
Joshua, quick one, about 30 seconds. What's your take on the equity side today for the banking sector in Nigeria?
Well, the qualification period has elapsed, so I think there might be a little bit of a bigger willingness for some investors to sell. I know I'll take some profits on that side. But last week we saw a lot of sell down in the banking space. I think so we might see a little bit of a correction this week. I think we saw that already yesterday. So the banking space should see, it's been up and down. Nothing definitive, no definitively positive or negative sentiment, but we might see some, buybacks for some attractive stocks, but overall not in the same volumes that we saw previously.
Thank you so much, Joshua Debisi from Verteva Capital. Thank you for having you on the show today. Agnes Ejita from GBS Africa and Frontier Africa Report, thank you so much for being here. Ali Kansacho, CEO and founder, Rich Frontiers Management, thank you so much. And Ayode Jebo, the CEO at AfroInvest Securities. Thank you for being my team today. We appreciate your time. Have a great day, everyone, and see you again tomorrow.